Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, February the 5th. My name's Eric Wilkinson, and you very well may recognize me from mainstream media where I've talked about everything from the economic to geopolitical and market analysis. I do that same stuff in these daily market commentaries where I talk about this economic data, how it's impacting the overall markets, and then I layer on top of that some option strategies that I like to implement in and around those assumptions. Please remember, past performance of any trading system or methodology, though, is not necessarily indicative of future results. All right, let's get on with the economic data. Actually, pretty exciting day for economic data, and good economic data for that matter. Start with across the pond over in Spain. We got services PMI coming in at 52.3, slightly lower than the expected 54.0. But remember, anything above 50 is expansion in the economy. When we get below that 50 threshold, that is contraction. So we got the Italian services PMI better than expected at 51.4. It was expected to be unchanged at 50.3, or right at 50, unchanged on, being expansion or contraction, really. French final services PMI missed just a little bit on expectations, but it's still above 50 at 51. It was expected to be 51.7. German final services PMI coming in at 54.2, expected to be 54.2. And then the European region coming in at 52.3, expected to be 52.5, expected to be 52.2. Great Britain's final services PMI coming in at 53.9, expected to be 52.9, so better than expected there. Although we did see a nasty number coming out of the retail sales of the European region, negative 1.6%, expected to be a negative 0.5%, and they did revise last month's number down 2.8%. We also, here in the United States, got some good economic data in the form of ADP non-farm payroll. Now, we get the most important aspect of this employment number on Friday. ADP comes out a little bit before. Usually, back in the day, we didn't really look at this very much. More and more people are starting to look at ADP, although, take it for what it's worth, to be quite honest. It did come in knocking it out of the park, though, at 291,000 hires, expected to be 157,000 hires. So just a knocking it out of the park number on the headline there. We're going to have to really wait and see what it looks like for the non-farm payrolls, but that looks pretty darn good. I don't know how they can miss by that much and really not show up in the non-farm payrolls. So that gave us a nice lift before the market opened this morning. It gave some euphoria in and around that, sent the NASDAQ equities and Dow Jones to, the highs of the day for the most part, or not really highs of the day, but really blasting it off, giving a lot of oomph, if you will. All right, we got our final services PMI coming in at 53.4. That number not being the one we really look at. We look at the ISM, which is the Institute for Supply Management, non-manufacturing, which is just service. PMI, Purchasing Managers Index, coming in at 55.5, better than expected, 55.1. Crude oil inventories, finally, we got a build of 3.4 million barrels, expected to be 2.9 million barrels. That didn't stop crude oil. As we talked about this, that getting down into the 40 handle of crude oil to me is just a little bit overdone. That's why I started to add on some USO XOP to my portfolio. Today, nice bounce, giving me confirmation of a bottom here. You can see price really just not being accepted down at these levels. Volume really thinned out when we got down there. Today, it blast off. Looks like we are going to try and migrate back to at least the point of control. So, got that direction. I'll move a little bit early. I'm usually a little bit early. Most people would wait for it today and get that confirmation, which this is a confirmation of that bottom. You get that doji down there and a quick bounce that is usually bullish going forward. All right, we've got the gold futures kind of holding on here, up about 6 points. We would expect maybe a little bit more weakness with the equities moving higher, but one could also say that this is very much of a pause right here as people are taking advantage. Maybe some of the weaker hands are taking advantage of that bit of a sell-off, and it's causing some consolidation right here. All right, bonds aren't waning a little bit. They are down a point on the day, or 30 ticks, just 2 ticks shy of that. Market has topped. It's coming back down to that 160 area, that sweet spot I've talked about, where I think that the interest rates should be kind of hovering around. I don't think that the Fed is really going to be too aggressive with lowering interest rates right now, especially with the economic data we've been getting. It's not been terrible. Retail sales has been crummy, but for the most part, we're seeing some good jobs data and the PMIs going forward. Now, those PMIs, we always talk about that is forward looking. One thing we got to remember though is this was before, these numbers were kind of thought of before the coronavirus, so that could start causing a little bit of trepidation with these purchasing managers going forward. So we'll have to keep an eye on that as well. VIX coming off just a little bit. We're still in the teens, so we still got some pretty good volatility. Here we got the the Dow Jones Industrial Average up 355 points. You can see we are very near the highs of the day. The high just maybe 17 ticks shy of where we are right now. So on the highs for the most part. NASDAQ was blasting off earlier this morning. We're starting to see a little bit of profit taking going on. Up only 9 points on the day. They were really having a good day earlier right off the open. You can see we're about 100 points off of that. One thing to note though, this doji up here at the top is starting to look a little bit toppy there, and kind of inverse of what we saw there with the crude oil. So might be a time to add some protection, maybe even sell some short calls in here, because I think we got some pretty good high implied volatility in and around these ETFs anyway. All right, E-mini S&Ps still pushing higher, up 26 points. We'll see that even show up on the daily chart. You can see overnight, nice blast off of some of the economic data that we were getting across the pond and here in the United States. Off the open, pretty much a short cover ahead of it. But as soon as we got our data here in the United States on our ISM and the ADP numbers, you can see we started getting some push to the upside. So E-mini S&P is looking pretty strong right now. Let's talk about some trades that I've done. Well, Tesla, with this kind of parabolic move, this is just insane to me. I've been talking about it. Finally, I decided to put my money where my mouth is and went in and sold some calls in there with the implied volatility through the roof. This is one of those opportunities, or one of those times where you can see volatility expand on a rising market. We talk about that. It's not always just to the downside. This was people going in there and buying calls at ridiculous amounts. The volumes in here were exceptionally high for Tesla. I think yesterday there was like 50 million contracts or something like that traded in Tesla. So we got that volatility really expanding. To me, that was the opportunity to go out there and sell some calls, and went in and sold the 16 deltas, but I went with the really shorter duration one. So I'm still in that February, only a few days to go. I think it's 17 days to expiration, and sold the 1,110 calls in there, and I collected $15.85 on those. So I did a really small. I'm not getting super aggressive on this. I actually wanted to see some kind of correction here, and got in a little bit earlier than now. I'm sorry I'm late doing this. I'm running a triage here. Everybody, I've gotten sick in the house, so everybody's home from school, and I'm trying to rush around doing all of that. So I've been really busy getting this out a little bit later than expected here. So Tesla coming off nicely for me after selling those calls there. All right, eBay. Now, eBay, you can see this blast off yesterday. Basically, the ICE, the Intercontinental Exchange, came out and said that they were thinking about buying eBay. And eBay came out and said, we're not selling. They always say that in the beginning, so the rumors are out there. It's going to really be based on what the shareholder once, and if they come out and say we'll pay $40 a share for it, eBay is going to be hard pressed not to go for that, or especially if it's up near the 52-week high. Having said that, you guys remember I had sold the February 33 puts in there. Now yesterday on this market rally, we could see that the price on these actually increased. So although I was in on these eBay trades a long time ago, the directional move was right. I nailed the directional move on that, right? So I had originally sold these February and sold the 33 puts, like I said, for 32 cents. Well, yesterday on this move, you can see that it was let's say, a $5 move to the upside. Well, with this volatility explosion on there, it was trading right around 33 cents. I was almost down money, or I was down money a little bit on those short puts that far away. So that's the expansion and volatility. I did get into selling these short puts with low volatility, and that is one of those things that we talk about. You really don't want to be selling puts in that low volatility. I was more concerned about trying to do some dollar cost averaging and getting a little aggressive with that. Was more than happy to buy eBay again at $33 had it got put to me. But that was something I was willing to do. That's a little bit different than just doing a trade by buying or just selling puts willy-nilly on a directional assumption. My assumption, and this was a little bit different than some of my rules on the trades, right? I have a long eBay trade. I was looking at dollar cost averaging. We don't really take into account the volatility or the implied volatility where it is at those kind of situations. But to know that that's why I have those rules on directional assumptions for trades, that you want to be able to get into those in the right environment. So it was really interesting to watch this market rally, the explosion in volatility, and my puts were actually not making very much money. Now that we're getting this volatility contraction, I took that opportunity to get out rather quickly today. So I got out of those 33 puts in February for 5 cents. So I made a nice little profit there. I also shaved half my holdings in eBay and got out at $37.17. So, 17-cent profit on about half of my holdings there, but I wanted to pare back some of that. I still want to ride it out a little bit just in case anything happens, especially with this new information out there, but why not pare back some of my exposure to eBay? I don't want to, get into that too much from here. But now, with this all being said, on this trade, I've lowered my basis by, let's say, 70 and another 50, so $1.30 on this, and then those 30 cents, so about $1. Let's call it $1.50. So I've lowered my overall break even in eBay by about $1.50. So my break even, I got long at 37 on selling those puts from that earnings back here. Lowered my overall cost basis by $1.50, so my break even is right around $35.50. That's nice, and I pared back some of my exposure to this, so made a profit on that trade. Basically, long at 35.50, got out at 37.17 here, and still have on some of those trades to capture some upside if anything crazy happens going forward there. All right, and whoops, probably Tesla. Where's Tesla at? We got to pull up Tesla here. Tesla, I already talked about, so that's all I've done. We did the short calls in Tesla, covered some of my exposure in eBay, covered the short puts that I had on that trade. So that's about it. That's all I got for you guys. Sorry this is out a little bit late, like I said, but I got to tend to the family too. So I hope you guys have a great day, and if you can't take that, take it easy.